I want to bring in Oliver Slope of Blue Line Futures, and he's in Chicago. Let's talk about this market action that we're seeing here to start out the month of May here, Oliver, on the very first trading day. Not a lot of bullish enthusiasm here across the grain sector. Why is that?
Yeah, not a whole lot, especially in that wheat market, as you had mentioned, just continuing to get sold into very, very aggressively from the funds. Looking at the Chicago July contract, we're down near 623. That's new lows for the move, and the funds just continue to pile in on their short position. Friday's commitment to traders report had funds being net sellers of about 10,000 contracts. They're now net short about 113,000 contracts. It's one of their largest net short positions in a while. So not a lot of fear there. I know some wet weather has worked its way into the forecast here over the next week or two, probably isn't adding any optimism to the bulls plate. Now, on the corn and soybean side, Friday we saw a big reversal off of those lows, and I'm a little bit disappointed that we haven't really been able to get a whole lot of follow through to the upside. We do have the July contracts for corn and beans, trading in positive territory here right now, but I would have expected a little bit more follow through from Friday's reversal. This afternoon's crop progress report going to be a big one for corn. Last week, a lot of that pressure came on the back of the export cancellations. It'd be nice to see some flash sales this week, but I think the bulls would be happy with just no cancellations this week.
That's a good point. That's all we have heard here for several days now is going backwards in the corn exports. Let's take a look at our corn prices right now. Our quotes are from Bar Chart. It is interesting how we have turned mixed with strength on the nearby contracts in corn. For example, you have July up a penny and a quarter now at 5.86 and a quarter. That's about 9 cents off of our earlier low. Now you have December 3 and a quarter lower at 5.24 and a half. It's kind of roughly in the middle of its trading range here today. Now, on the soybeans that Oliver was just talking about, we're higher across the board, but not much in the way of an enthusiastic market at all. July, just 1 3/4 higher at 14.21. That's not a very big move for soybeans. Now, we do have November up a penny and a half at 12.65. So there is that. It's about 4 cents away from its earlier high of the day. Now, on the wheat, whole different story. In Chicago, July down 11 at 6.22 3/4. And if you look at the Kansas City market, we're down 14 with July at 7.62 and a quarter. And if you look at the spring wheat trade, well, here you have the July contract 13 and a quarter lower at 7.90 and a half. I heard earlier this morning, Oliver, that it looked like commercials were buying some of the wheat futures. And you have the big managed money funds still heavily short, like you were just talking about. And they wondered if maybe there was some active purchases in the works that maybe we'll find out about sooner or later if commercials are buying right now. Does that make sense to you, or how would you feel about that?
Yeah, it does make sense, but right now the funds, are really having full control of this market, and we are in oversold territory. But oversold is just a term. We've been more oversold than this here earlier in the year, so the market can trend lower. We have seen larger net short positions in the past as well. So although I'm optimistic that we can get some sort of relief rally in the wheat market, the path of least resistance has been lower. From a trader's perspective, if you're looking for a counter trend move, the trend is down, so a counter trend move would be looking to the upside. Options are a great way to get that exposure with limited risk.
And let's look at the cotton market here before we head into our break. And right now on July cotton, we are down 35 points at 80.45. December down 52 at 80.58. We'll return and we'll take a look at our livestock trade with help from Oliver Slope right after this. Well, we were watching earlier this morning, there was a big move in West Texas Intermediate crude, and it was sharply lower. We're still lower, maybe not quite as much. We have June futures down $1.07 at 75.71 per barrel right now. So it has come off of its earlier low of the day by a little over $1. But interesting stuff going on in gold. Do you remember earlier in the broadcast, if you were with us, we had gold $14.50 higher. Whoops. Look at this now. You have June gold $5 lower. What happened to that thing? It's at $19.94.20 per ounce. It had been up at $20.15.40. So that's, you shaved off about $21 off of that thing here in the last hour or so. Let's go back to Oliver Slope of Blue Line Futures. That's a weird market. What happened there? Any idea?
Yeah, the metals have been very volatile to start the new month. Gold well off the highs, silver about 80 cents off the highs as well. I think a lot of the strength in the early morning trade came after a weekend of more concerns around a bank. We had some heavy pressure in the Bitcoin market, and I was thinking maybe some of that cryptocurrency funds getting shifted into a old school safe haven asset like gold and silver. And then we've got a big Federal Reserve meeting on Wednesday as well. So there's a lot kind of jockeying these precious metal markets around. I think it's going to be very interesting throughout the rest of the week and really through the rest of the year. And a lot of that's going to be hinging on what the Fed does going forward, not just in this Wednesday's meeting, but their outlook past that.